All right. Morning, everyone. Let's kick it off. All right. First things first. The Friday session in the S&P, we got a little bit of a continuation lower here in equity markets. We're kind of a bit of mixed action throughout the day, a bit bumpy, a bit of a rough riding up and down throughout the session. But bottom line is, we managed to finish a little bit lower, continuing on to the back of what was the worst week on the S&P 500 since 2012, which I think is really significant. We had a huge rally in the VIX on the week, closing at about 17, up from as low as a 13 handle, I believe. So very, very important to get that kind of sell-off over the week and to really just shake things up a little bit in the markets for the first time in probably 9 months to a year. We had non-farm payrolls in July, which came out on Friday, which were lower than expectations, as well as the unemployment rate, which came in 0.1% higher than the expectation. That was at 6.1, and really it didn't add it. I don't think added fuel to the fire. In fact, if anything, it probably gave a little bit of relief to the market, probably giving the Fed a little bit more wiggle room. Those two data points, combined with the fact that wage inflation wasn't really a problem, I think really gives the Fed a little bit of wiggle room in the short term. So probably a bit of a relief from the market from that point of view. We also had some earnings: Procter and Gamble, Tesla Motors, all those guys running after a good set of numbers, and then we had GoPro, which got hammered after weak numbers, I believe, down about 14%. If we look at the Asian session overnight, you can see that we were more or less flat on the back of that final sell-off in the States. But we had Shanghai, which really stood out with 1+% gains. Really, the banking and brokerage shares there driving the market. And as we talked about last week, this is I think this must mark 7 or 8 days in a row of gains out of Shanghai, which is worth noting. And it's going to be something to pay attention to going forward if they're able to continue to rally. And I don't actually have the chart prepared for this morning, but if I'm not mistaken, they're getting dangerously close to breaking out from a kind of a long-term downtrend here on that index, which is very important for global equity markets, to say the least. So that's going to be something that we're going to need to pay attention to. The rest of Asia was a bit of a non-event, not a whole lot happening. Like we said, in China, we also had PMI numbers which came out, which are a little bit softer than the June number. Came in at 54.2 from 55 reading in June. Probably a bit weaker based on the property market there. Right, this little chart here is from actually a local source, Nedbank Capital, and it's basically showing the divergence between the global PMI numbers and the local PMI numbers. And you can see there, we were kind of happily chopping along a little bit above or below global PMI and that trend for the better part of the last 2 years until about March of this year, when we really started to properly diverge, and to be quite honest, I mean the PMI numbers have just been absolutely shocking. We've been in contraction now on the local PMI for about 5 months, and that's really going to be quite devastating, I believe, for the local economy and what that means for us going forward. So when we talk about the rand, this kind of thing factors in. When we talk about some of these industrials and things, obviously factoring in, but just a big negative overall, I think, for our local market. All right, there's a couple stocks going ex-div today. We got Anglos and SAB. Remember, these are in US dollar cents, so we're talking about some big divvies. Breweries is going to be coming out with an over 9 rand divvy. Anglos coming out with closer to 4 rand on the back of that. So just keep that in mind and do your own calculations there. And then we've got AIG, which comes out in the States. It's not AIG. In fact, it's just American International, which comes out in the States after the bell today. All right, so market data, we've got, we had the Japanese monetary base, which came out a touch better than the prior numbers. We have unemployment in Spain. We've got market UK construction PMI numbers, and then we've got PPI numbers coming out of the Eurozone. This week's going to be a lot lighter on the data set than last week, so probably less to do with what comes out in terms of market data. We'll be focusing on some of the other things that are out there, and probably more focused on the trade action. If I could just also make two other notes on things that aren't in the presentation this morning. One based on Banco de Espírito de Santos, or whatever it's called in Portugal. The government has basically made a strategic decision to kind of bail them out, split them into two banks. That'll obviously be a little bit of relief for the Portuguese market and probably Europe in general. And we also have, what was the other thing I was going to make mention about? We also have Israel, which has pulled most of their troops out of Gaza. So, we might see a little bit of relaxing of the nerves because of that kind of thing as well. So just keep those 2 points in mind as well today. All right. Let's get into the maps. The first thing I'm going to show is it was the S&P 500, I do believe. I just wanted to have a look. Kind of, last night I was having a look through sort of the health of a lot of the indexes globally at the moment, and to see what where they stood technically. And you can see there, the S&P, we've really dropped major support, I think. On the S&P, there's a couple little levels that are significant, probably around 1950, probably around the level that we dropped on Friday, which is about 1930. To me, we're setting up now to make a retracement back to where we probably really broke out, which is closer to 1880, 1890, somewhere in that region. There's a lot of ways to potentially look at drawing this, but this is definitely to me where I think that we're going to end up getting a retracement to, and it'll probably line up somewhere nicely around more or less where the 200-day moving average is. So. That's obviously probably includes a lot of bouncing up and down in the medium term, but in my mind, we've dropped some significant technical levels, not just here, but in a lot of these international indexes, and we're going to have to kind of wait for these things to get to the right sort of levels before you can, I think, really start to turn around and get back into the bullish camp. All right, let's look at some of the local stuff here. Look at Foschini Group. I want to look at this on a 2-year chart, and just having a look at this chart yesterday, we're at a very important level here technically, right around 117, basically right at 117, and we've been flirting with that last couple of days, bouncing around on either side of it, really just consolidating right at major resistance there. I think if we break up through that, then we've got a hell of a long way to go on the upside, and at the same time, we could very easily fail this and revert back down to the downside. So let's just watch this level closely in the next few sessions. I think it's going to be very significant. There'll be a very significant move either way for Foschini off of that level. All right, the next one we're going to look at is CFR. We looked at this the last couple days, and I just wanted to show it again for the simple reason that we actually finally dropped support here, and this is a very, very definitive trend support, if you ask me. I mean, we're drawing this thing at the closes here, so at the bottom of these red candles, and you can see there we dropped out below that. The support level here comes in right at 102, maybe even 102.20. And we dropped it. We closed at 101.33 on Friday's session, and let's monitor that one over the next couple of sessions. If it's not completely convincing, obviously, as you can see there, that we've dropped major support. So I think we're going to need to see us, prove itself down here, and actually even start to push a little bit lower before we can really be convinced and attempting a short here on CFR. All right, next one is Sasol. Sasol on Friday dropped major support. It kills me that I didn't get any stock down closer to the 600 level. But you can see here at 620, 620 was definitely the level. You know, we had popped down there a few times. We were managing to kind of close at 620 or 619.50 or whatever. All these times, attempts when we got down there, and we bounced up to 640 about a week ago. On Friday, we really failed this level significantly, and the major level here is really at 600. It's much more significant than 620 if you ask me. It's really where we broke out from, and we traded up beautifully to our full target on that move higher. I'd love to see another pull back down toward the 600 level. Let us get an opportunity to have a nibble down here around 600, probably one of the better setups to that extent. Another one that looks very similar to that, I think, is the MTN, which we've also shown several times. But this is important because Friday we traded to as low as about 1730, 217.30 on the session on MTN, and we managed to not only bounce from there, but we also held the 220 level, which is incredibly important. And we are basically still holding to the upside of this flag. And I think that this thing, all it needs is one really solid day. Probably needs to get above 225 for confirmation, because we have bounced up to 225 for many sessions in a row, and it's kind of been rejected off of there. We get above 225, this thing could be off to the races. Could definitely take out new highs. I know they've got earnings coming on Thursday, I believe. So keep an eye out for MTN over the next few sessions. All right. Did I really put no? I typed the wrong code. Sorry. I was looking for Aspen. Aspen really starting to define some levels here. 290 being a major level that we kind of keep pulling back down to the last couple of days and managing to hold. You can see here, without question, there's some support at 290 that we're bouncing off of, and 300's kind of been the top end of that range for the last little bit. So we've been bouncing around in this band for about 2 weeks. I think the day that, when we finally drop 290 or break above 300, whichever way it goes, there'll be a good 10 rand move at least to one side or another. And this thing has been consolidating off of the back of some, I think, what was significant news as well. So this is going to be it's probably could be a real significant breakout when we do see it move out of this little consolidation phase that we've been in. And the last one I'm going to show is Impala. Impala, I know we've looked at this a million times. The only reason why I wanted to show this one is simply because we did pop back down here. We've made a new closing low as of the last however many sessions. I don't know what happened to my line. Not drawing. But either way, you can see there, we closed to a new closing low. There it is. It just showed up out of nowhere. You can see there we took out the closing lows from a few sessions back, and after we made this big bounce up to about 112, we've reversed right back down. We've taken out the lows, and we did it on big volume on Friday. I think this thing probably is due for a dead cat bounce in the next couple sessions at some point, but I think off of that bounce, this is the action in the last few days is only confirmation that we need to be short of this one. Watch it really closely, because I think this thing is going to take out 100, and it's going to trade significantly lower than that as well. So just keep an eye on that one. There could be some more meat left on that bone. That's it for today, guys. Good luck out there.